Hello. Switzerland's Competition Commission, the WEKO, at the beginning of the week formally called open an investigation into 8 Swiss, US and British banks over the possible manipulation of foreign exchange rates. The alleged rigging of the Forex market has been described by some commentators as a bigger scandal than Libor. But just what impact is this having on investors and the market itself? Well, joining me in the studio is Leroy Lawrence of Quadron Capital. Leroy, thanks for joining us here.
Thank you for having me.
Just a first question. Governor of the Bank of England, Mark Carney, has been rolled out on this one. Where do you think this scandal is heading at the moment?
It's heading to more lawsuits, more litigation, increased regulation, and I think that's a real shame. The last thing that any professional inside of the regulated financial business sector wants is more regulation, not because we don't want to protect the investor, but because we'd like to do our job. And when you're dealing with investments, you need to have the ability to do that to the best of your ability for your customers. But what's happened at the moment is a further question mark over the integrity of the overall market. Before, as you mentioned, we had the Libor scandal not so long ago, and now we have the FX rigging claims. We've got investigations coming from the Swiss authorities, also coming from the US and the UK. And on top of that, we have lawsuits being filed from a variety of hedge funds, pension funds, and Philadelphia state as well. And even worse is that the inclusion of the Bank of England in the claims of this 4 p.m. rigging scandal. And I think the last thing any of us would want is for the Bank of England to be considered complicit, because they are a real cornerstone of the marketplace. Indeed.
I just was going to say, Leroy, do you think then, as a result, I mean, do you think this is frightening away some investors to move away from the Forex and into other pastures?
No, I think it's unfortunately almost inevitable that other scandals will turn up in other markets, and if you keep trying to run away from a scandal, you'll run into you no longer invest at all. Of course, there's been talk of FX spot investors moving over and investing into futures instead, but you have to realise just how old, if that's any form of defence, just how old the FX market is. It's one of the oldest markets around. And the size of it, 5.3 trillion per day. It's a massive market, and 5% of the volume from the FX market into the futures market would make a 50% increase in the futures market. And I think it would just be wishful thinking to expect people to run scared every time there's a scandal.
Okay, but the market itself, as you just mentioned there, I mean, you know, it's a very liquid market. We have seen a decline, though, in recent years in the Forex market, but it's still you know, pretty much the most liquid in the world. But what effect is this having on market confidence, though? Because, I mean, the market's under strain, under pressure, really, from a number of events, the geopolitical events in Ukraine, and we've got Syria. You know, I mean, these markets are pretty fragile, aren't they?
Yeah, I mean, if you go back to Ukraine, the Crimea and Russia situation in the recent weeks, we've seen the ruble fall almost immediately off the back of that. So we do see fragility, but then again, volatility is how money is made, especially in FX. We need volatility. It depends how you risk manage against it. I don't think the overall market can really be shaken enough that you're going to see a kind of ongoing one direction decline away from the FX market. And I think, for example, with just going back to the scandal with the rigging, if they would reduce the ability for people to bend the rules, such as the 60-second trading period for setting the daily price, if they would increase that time period, it would be much more difficult for your top tier banks, which I think has increased to 12 now from 8 initially.
Yes, and we must stress at the moment, though, that obviously it's in the early stages. It's being investigated. It's not been essentially confirmed that there has been any rigging involved. Just before we go, Leroy, I just want to ask you, you have your own FX fund, don't you?
Yeah.
Obviously, as you mentioned, that and I mentioned too that some British banks are implicated in this investigation. How's your fund being affected by this, if at all?
Well, the major confidence shift that's affected us and every other FX fund has been the effects of the recession for 2009, and we're really just brushing that off at the moment. When you look at the value of funds, they've only just taken a turn in the last year or so into positive territory, and lots of the largest, well, not lots, so one of the largest FX Concepts funds, which was a $14 billion fund at one point, is no longer with us. What we've found to offset information news that affects the market is to change the way in which we manage risk. We can no longer just follow trends, because if we were following trends in the wrong direction with Russia, we'd be in a very difficult situation. So we have a much thinner base of hedging when it comes to market, and we have to completely unwind before major news comes out. Otherwise, we would be following suit of our previous predecessors. But confidence is definitely growing market-wide. You see equity just continue to rocket, and I think FX is just about to take that turn now, and we should also follow suit and begin to follow a bull market, I believe. Okay,
Leroy, thank you very much for joining me today on that.
Thank you.
That's all we've got time for on Dukascopy TV for the moment, but join me later. I'll be talking to a former journalist at The Economist on social media and the pros and cons on the political landscape. But until then, bye-bye.